Well, hello, Las Vegas. I am super excited for this Saturday's show. We have got updates. You know what? A lot's been going on. You guys have seen it all over the news. A lot of shifting happening, within our country as well as within the housing market, right? So I've got my team. By the way, I want to give a shout out to my lender. Let me tell you guys something. It really matters which lender you choose. The years of experience that I have in real estate have taught me that the lender that I connect my buyers with will make or break a deal, okay? Will cancel some dreams out. I just want to be straight up with you guys. You know how I talk to y'all like cousins. It matters. Going to your bank matters because that file will sit on that desk over the weekend, but your real estate transaction does not stop, if that makes any sense. Now, I'm not bashing banks. They've got great rates. They've got good incentives, but you have to understand, what else that also can mean for you if you go for a bank versus a mortgage lender who he does not eat unless you get that house. The bank employee clocks in and clocks out. I mean, just you make your own decision, but I'm just putting it out there. But I am blessed to have, he is able to give you a loan that will make it all the way to Keys in all 50 states here in our beautiful country. Okay, not a lot of people can say that. I can say that and say it with confidence. I have been dealing with Mr. Valentino for over 4 years, and I have yet, knock on wood, to lose a home for my buyers. Okay, so that happens quite often. I want to be honest with you. If you pick the wrong lender, things pop up. Life happens. Things that you didn't know were going to pop up into your file come up within that 30 days of closing. And now, if you don't have a top-notch lender, they don't know how to get you out of it. They don't understand or know the rules and update themselves constantly on the ever-changing rules so that they'll know how to accommodate that situation and get you over that hump. And that's why I'm such a cheerleader for Mr. Valentino, because he has proven time and time again with many of my clients who have had issues come up that they didn't even know were going to come up that should have cost them their home. And he has got them out of that situation. So needless to say, I'm obviously bringing none other than Mr. Valentino with Guaranteed Rate on, my team lender. And as always, my right-hand gal, Miss Rebecca Coins.
Hey, Mo.
Hey, Mo. Hey, Becky. Almost called you Mo. Hey, Anthony, are you there?
I am. How are you?
I'm great. Was that a good introduction for you, or?
That was absolutely amazing. You didn't say anything about how you're an icon agent, how, you're 7 days a week, and how you completely, are a visionary for your clients and how you make things happen that most people didn't think could happen. And that's a testament to your drive and to your focus. And that's 100% your client. So I just want to commend you.
Well, I appreciate that. But you know what? It's a team effort. You know what I mean? Becky is part of my team. She's out there. She pays attention to the small details. She gets out there and gets my clients the home that they want, drives them around. You are my lender. You are working those numbers. You're not just skimming the surface, but you're deep diving into every aspect of what they've got going on in their home so that you're saving them money, not only on the home, but you're going deeper. You're saving them money on their cars, all kinds of stuff. I'm like blown away with the deep dive that you do that I never seen, in the decade that I've been doing this. I never seen it until God sent you my way. Most lenders just look at how they can get paid, and forgive me, I won't say most lenders. Yeah, I'll go ahead and say it. Most lenders are just skimming over the surface to see how they can get you approved and go ahead and do the deal. But you're looking at the full picture. You actually care. And then I've also got my administrators, Liz and Sheen. They're over there doing the back end, checking in on my clients, sending them what they need. So it's not just me. I'm grateful. I'm thankful that God put me in this position. I love what I do. I love to help people achieve their home ownership dreams, but I don't do it by myself. I have not reached Icon Agent, which, if you don't know what that means, it means top 3% within my brokerage of 90,000. Okay. That is not my accomplishment by myself, but first and foremost by God. But you guys as well as my team. So just want to give you a shout out, okay? Now that I've patted everybody on the back. I love you guys. And you know who else I could not have reached icon status with? My KUMV listeners. They listen to me faithfully for years. They'll say, Mo, I listen to you every morning on Saturday, on my way here, there, and everywhere. Thank you for what you're telling us. I would hope that they would use us as a team, but even if they don't use us, our heart is in it. At least they know what's going on within the deal because they've listened to the show. Is that right, Anthony?
Yeah, I mean, that's you have it spot on. And nowadays we are less working on transactions and more, alleviating obstacles and educating and breathing confidence in, because in this world, in this day and age of AI and technology and social media at our fingertips, we have a lot of data, but that data can oftentimes be incorrect or subjective. And how do we take that data and convert it into information we can use and, more importantly, benefit from? And that's where you and I come in. We take a lot of data and we crunch it down to information that's easy to digest and that's informative. And buying a house, it's not just about a transaction or a monetary aspect. There's a why behind every house purchase. And once people understand what that why is, if it's for generational wealth, if it's for their family safety, if it's for financial security, once people understand the why behind the house purchase, then that's where you and I come in to show them the path, not only aesthetically, but economically. And it's more of an education that I take my clients on rather than a transaction, because I want them to know what their payment is, what their out-of-pocket is, how they're doing the financing, where the market was, where it's at now, where it's going. All this information to breathe confidence into them. They know their payment, they know their out-of-pocket, and they know, more importantly, their debt-to-income ratios, their loan-to-values. They're like mini economists with just very easy, basic, not rocket science information that we feed them when they go through the process.
Yes, and that's exactly what we pride ourselves on is, making it in everyday English. I always talk about that one commercial where they show the real estate said something, or the realtor said something to the clients, and they're like, the people were looking like, what is she talking about? And then the guy comes in and says, this is what she means. You know what I mean? Because, you only know what you know. And if your profession is in healthcare, why would you know?
Absolutely. And buying a house is scary.
It is scary.
It is
it's one of the largest purchases of your life. So you don't want to be in the dark. You don't want to be confused about what's going on or what's coming up next. It's a 30-day adventure, but we try to make it as less painful and you in the know as possible. So with that being said, let's talk about the rates and what's going on right now, Anthony, as far as rates. People are hearing all kinds of stuff about rates. Can you kind of hone it all in for everybody out there, where we were, where we're at, and where we're going?
Absolutely. And you nailed it. In order to know where we're going, we need to know where we're at and where we were. And in an easy to understand way, we have two different types of things that we look at for the market, and that's the interest rates. And then the market is the Fed rate. Now, when people hear online or through social media or on the news that the Feds have lowered the rate, they're not talking about the mortgage rate. They're talking about the Fed rate, which in easy terms is an overnight cost that the banks charge other banks to lend money out. So the central bank lends money to Wells Fargo, Bank of America, rate, and then there's a cost to that. And if that cost goes down, then the cost for the end user, the homeowner, goes down as well. But there's other factors. So when the Feds lower the rate, that's only one part to lower the mortgage rate. There's also economic data, jobs reports. There's also forward thinking of what does the future look like? Is it uncertain? So in a nutshell, when we look at, behind us, we saw nothing but rate increases due to COVID and due to monetary spending. And we saw the Feds raise the rate 9 times in 23. And we saw rates go up to 8, 9, 10% at one point. It was really crazy. But then we look at 2024 and the Feds lowered the rates twice. And we look at 2025 right now, the Feds lowered the rates 1 time, and they're looking to lower the rates another 2 times potentially by the end of the year. So when we look at the next 36 months, we see nothing but rate reductions. So are we going to see rates in the 2s and 3s again? Most likely not. But will we see rates in the 4s? Absolutely. So what you don't want to do is to be the 5.5 million people on the sidelines waiting for rates to hit the 5s because they're jumping up. Because guess what? That's what's going on right now. Rates are in the 5s for VA, for FHA, or sometimes if you buy it down for conventional. So for all the listeners right now, if you're thinking of buying within the next 5 years, so that way you are getting educated and off the sidelines, because we see nothing but rate reductions over the next 36 months. And it's not a question of if they're going to lower the rates, it's when they're going to lower the rates. So that tells you you need to get off the sidelines and start operating.
Sounds good. So yeah, so let's break this down into the meat and potatoes of it. Let's talk to somebody out there that has been on the sidelines because they have no money down right now. What are some options? I know what they are, but let's talk about those down payment assistance programs.
Let's hear it from the magic man.
There we go.
Yeah, I mean, the biggest misconception is you need money to buy a house, when that is the complete opposite of the definition of leveraging. And as we know, income equals debt and debt equals income. So the more income you make, the more debt you create through taxes. Whereas the more debt positions you create, the more income you can keep for yourself because it's tax shelters. So in the same thing with mortgages, there are first-time homebuyer and existing homebuyer programs with zero down. Let me repeat that. Nothing down. Now, this is not a VA where you're putting nothing down, but you're getting a subsidy, whether it's through a state, federal, or third-party substitute, to where they're giving you money, and you can use that as a down payment. So, for instance, a lot of people say, well, Anthony, I make more than the medium household income of $70,000 combined. I don't fit the bucket of first-time home buyer where you have to have a certain income. Well, the thing is yes, there are down payment, 100% covered down payment for people who make under the medium income. But if you are the few that make more, you still have options. So whether you're the single mom that makes under $50,000 a year, you have options for down payment assistance. Or whether you're the family making $100,000 a year, you still have options.
Yeah. So I want to ask you too, Anthony. So going back to our VAs. So with your VA benefit, there's a lot of myths that are going on with there. And you're helping my son right now currently with his loan. And he had a lot of myths that he had to ask you about. So one of them I wanted to ask for all of our listeners so they can hear it from the horse's mouth. Can you use your benefit more than one time?
You absolutely can. It's called entitlement. And so there's two ways that you can use entitlement or dual entitlement. If you are active military and you get orders to go to a different state and you currently own a house, then you can still use your VA entitlement. So you can have two VAs in different parts of the United States and still take advantage of it because you have orders to be pushed somewhere else. Now, the same is if you buy a house with VA and then you want to buy another house later on, nothing is stopping you from refinancing that VA into a conventional, vacating that entitlement, and being able to buy again with nothing down another house. So you just have to get creative and you have to think ahead. Are you going to want to buy a house within the next 5 years again? If so, let's strategize to where you can purchase houses with nothing down as your primary residence and leverage the current house that you have. And we can utilize other loan options so you can get the best benefit from it.
And what about spouses of fallen soldiers? Because I know a lot of them don't realize that just because they unfortunately lost their spouse, sometimes they think they lose that benefit.
100%. And so that surviving spouse benefit, so many people come and go. And more of the older generation, I'll talk to older generations and, they'll be looking to buy a townhome because their loved one passed away. And then I ask them, well, wait a minute, were they a veteran? And they're like, yes. I'm like, well, why don't you just do the surviving spouse veterans benefits with nothing down? They have no idea because it's not easy accessible, this information. That's why it's really important to talk to a lender that looks at the full picture. So that way we're not leaving any low-hanging fruit for that client.
Yes. And then they can also use their 401k for down payment, I think a lot of people forget if they have a 401k, some stocks or anything like that, they can utilize those funds, right, for their down payment.
Oh, yeah. And not only that, you can use 401k, bank of the mom, bank of the dad, bank of the sister, bank of the brother. Like you can, like, this is what I love about my job is showing people that the impossible is possible. And when I have a conversation with people and they see that, wait a minute, I could buy a $300,000 house and it's less than $10,000 down, and I have $3,000 myself, I got $2,000 my 401k, and I'm only about $4,000 short, and I can get gifts from 7 people to cover that. When I strategize and show them a way, even if they can't do that, the worst case is let's do down payment assistance. Let's have a higher rate with, $100 higher in payment, but that's better than doing 100% rent where you're not building generational wealth. So it's just having that conversation, starting that out to see what's going to be the best option for you. But the best option is definitely not renting, and it's buying, whether it's down payment assistance, first-time home buyer, or bank of mom and dad. There's definitely an option out there.
Yeah, you know what I like to always remind people? Listen, at the end of the day, renting is not the way because, you're making zero. It's 100% interest rate. I rented at what was it, $1,300 or $1,500 a month for 5 years. I paid that man's house off, $90,000, but I didn't realize that. Nobody put that in my face and said, listen, you're going to rent here. Sure, it feels safe. It feels comfortable, but it really isn't. It's a facade because you could be put out within 5 days here in the state of Nevada. Your rent can go up as much as your landlord pleases because there's no rent cap here in the state of Nevada. You can be served hey, you got to go in 30 days after your lease is up.
I had that.
Hello. And so did my best friend, Alicia. She was on birthday trip in Costa Rica, rented from a friend for 5 years on time, thought she was safe because she knew the guy.
Yep.
The man's going to make the decision for his household that's best for him. Mm-hmm. So guess what? She called me frantic, got a 30-day move out because he decided to sell the property. Guys, 5 years. I paid $90,000. The man bought the house for $100,000. I paid that man's house off. He made equity. He could turn around and sell it for $300,000. And I walked away with a $2,500
I was going to say,
deposit.
did you get your deposit?
He was a sweetheart. He was nice. He did give me my deposit. But here's the point. Why walk away with $2,500 as a renter with false security of feeling safe when you're not, because you could be put out in 5 days? If you're a homeowner, there are months of them trying to help you stay in that property. You go ahead and tell them, hey, you know what I mean? It's a complete game changer from being a renter to a owner. You can do whatever you want with it.
Here's my favorite, Mo.
What is it?
My favorite is this. When I see it all the time on my, because I have a podcast, the Mortgage 101 podcast.
Check that out, you guys, the Mortgage 101 podcast.
Mm-hmm.
Shots out.
Yeah, but basically all things mortgages to really understand how they work on a practical level. But we get this all the time of people saying it's so much cheaper to rent right now, and we're going to see house prices just fall completely. And why would you have a $300 or $400 or $500 higher mortgage payment? And I'll answer that for everyone who's listening to this. When you look at a house, I want you to think of 4 pillars of economics. It's not just one-dimensional. So when you own a house, every time you make that mortgage payment, there's paid down equity. You're paying down that house, and it goes back in your pocket until it's no more. That's the first pillar. The second pillar is the appreciation. There's only been 4 times since 1936 that houses actually went down, and it was very small, only 4 years out of the 100 years almost that we've been seeing it.
Right.
So the chances of houses going down and not coming back up are very small, and we can do another episode of why we think houses are going to stay high with inventory, with historically high rates. But at the end of the day, average, you're looking at 3 to 5%, not the 9 to 10% we've been seeing. About 3 to 5% in appreciation. That's the second. That's the second one. The third one is the tax incentives. When you're a homeowner, you can write off the interest, write off the insurance, write off the taxes, write off the maintenance. So now, if you're W-2 or self-employed, you're getting more of your money back at tax season that most people don't even realize. And then the fourth one is that is that cash flow. This eventually will be a rental for you that will cash flow and give you generational wealth that you can leverage that debt to buy more for your portfolio. So when people tell me renting is better, you're getting 100% of nothing.
Nothing.
I'd rather you get 90% of something than 100% of nothing as a renter.
And if you're just tuning in, this is Monique Buchanan, the Welcome Home Show. We have my team lender, Mr. Valentino, on, along with Miss Becky. And if you're interested, or just maybe you missed something, you need more clarity on something, or you want to talk to Mr. Valentino, 702-984-3700, 702-984-3700. My website is welcomehomewithmonique.com. Instagram is Realtor Monique Buchanan, Buchanan. Now, Becky, you brought up a good point. What was your point?
Back in the day, I remember when I was by myself and I was single and I was a single mom, and you start thinking about home ownership, and I was like, I don't make that much money.
By
like
myself.
By myself. I'm a little nervous. Like, I'm barely making my rent. I'm doing my thing. But you kind of have that concept of, if you're going to be able to buy a house and you need somebody, it's got to be a spouse. It's got to be a partner. Or it's just one of us.
Right.
You know, just one more. We've done loans for 3 people.
6
4,
family members.
Right?
They don't even have to be family members. Boyfriends, girlfriends, friends of friends. How many people can be on one loan, Anthony? That's a great point. To buy a home together.
Unlimited.
Maybe get an AUD
you
in the back.
Unlimited. This is what we call house hacking for my Gen Zs out there. My Gen Zs know what I'm talking about when I say house hacking. House hacking is when you have multiple people go into a house. So rather than, if I see I'm helping a lot of college students, rather than renting a dorm or renting a townhome, they're so savvy that one of them will buy a house and then rent the rooms out to cover the mortgage, and now they live free while other people pay for an asset that is materializing. That's house hacking. You can do that as well if you're not a college student. You can get mom, dad, brother, sister, and uncle to be a co-signer, whether they're non-occupying or not. And, you know, there's a lot of these houses that have mother suites or have generational living to where you can rent that out to offset the cost. This is what you need to do in this day and age in order to be a homeowner and not just have an excuse of why you're not being a homeowner.
Sweet like candy. So let me jump in real quick and just give you another shout out, Anthony, because for all that don't know, I am humbled and very grateful and thankful to say that I've just bought another investment property with none other than Mr. Valentino.
Yay.
And you guys have heard me talk about this program. Basically, you have to have at least, what is it, Anthony? What's the minimum credit score for what I used?
640.
640 credit score. You have to have at least, a 640 credit score. You don't show any of your documents, you guys. So if you're out there, you already own your own home and you want to build your portfolio, or maybe, I don't know, something's going on where you owe taxes. For instance, you owe taxes, but you're like, well, I can't buy right now because I owe the IRS. Yes, you can. There is a way that you can buy. 640 credit score. The home the property must be able to basically pay for itself. So let me just give you my example. I bought a townhome. I paid $175,000 for this townhome. My mortgage is about $1,500 with the $170 HOA. Now, Anthony says, Monique, you got to show me that you can rent this out for more than that $1,500. That's no problem, right? I look it up. I see that one just rented for $2,000. I send that to him. I've got the credit. I've got the 20% down. That's the other part that you must have. So I put $38,000 down on the property. Okay. And now I own the property. We closed on it, 2 weeks ago, Anthony?
Yeah, so this program is exactly what you said, Mo. It's based off of the income that the asset's producing, not the buyer. So no income, no taxes, no documents, other than putting 25% down. That is all we're needing. Once you put 25% down, and as long as the rent, and we do a rent schedule. So we order an appraisal, and then the appraisal will say, hey, the average rent in this area is $2,000 a month. And if your payment is $1,500, that's cash flow. You're approved, and it's done.
Right, and I'm so grateful because my cash flow on this particular property, KUMV family, is going to be about $600 a month. You guys, I was able to get funds from the seller, to pay my entire closing cost. So you know what I paid? Just the down payment, and that's it. And what is it? Is it unlimited how many properties I can build my portfolio with this program, Anthony? I can buy as many as I want as long as I have the 20%?
That's right.
So if I was somebody that had $200,000 saved up somewhere, sitting, that's barely making 1% with the bank, they can sit there and say, hey, I want an investment property. We do our magic, find an investment property that's going to, make them some money every month versus the 0.001 you're getting from the bank by it sitting there. By the way, guys, I cashed out my stock. I cashed out my stock from my brokerage. So I didn't even touch my own savings because you know why I did that? I know I'll make more money on my real estate investment than what my stock would make me every year.
So wait a minute. I'm a business owner and I haven't gotten my taxes taken care of yet. I'm a little bit behind on my paperwork. So Anthony, I can do this?
100%, because we do not base the income off of the person, aka tax returns, bank statements, pay stubs. We base it off of the asset. So as long as the asset is income generating, that's all we use.
So you guys can buy as many as you want. I plan on buying 5 a year if God allows, if the Lord says the same. Okay. But that's what my goal is, to buy 5 a year. This is my first time buying it this route. It was so easy, Anthony. It was so simple. I didn't have to bother digging up W-2s and tax returns and, did you get that? Let me upload this. It was so simple. It was amazingly simple. So I am a witness to this, you guys. It was my first time using this program. I plan on using it many a times more because I don't know about you guys, but I'm not getting any younger. Becky, are you getting any younger?
No, ma'am, and I'm right behind you.
Honey, I need some money coming in besides my husband's retirement and pension. Right, Anthony?
That's right. It's all about passive income, generational wealth, making money while you sleep, not working for your money, but your money working for you. That's what it's all about.
Okay, so we're going to go ahead and wrap this up real quick. I just want to say that, listen, I'm going to go ahead and put this one on Section 8. There is a dire need for people like yourselves that are hearing this, that have a little money, are able to invest, have that 640 credit score, because there's guaranteed rental. They guarantee their rent to be paid. Even during COVID, Section 8 was paying. So that's the route I'm taking, right? You don't have to take that route, but that's the route I'm taking. So just to recap quickly, because we're down to 1 minute. I wish we had more time. Anthony, you knocked it out the park. We've got the down payment assistance programs. You only need a 620 credit score as long as you have worked for any job at all for the last 2 years. We can get you zero down. And right now, because the market is a buyer's market here in the Las Vegas Valley, we will be able to get those closing costs, if not in its entirety, the majority of them paid for you. In the last 10 years, I haven't seen it. So if you're interested in purchasing a home, you're tired of just talking about it, 702-984-3700. 702-984-3700. Me and my team are here to assist. We are in this to win it. We're in it to help our clients, our listeners. We thank you for all of your referrals. Anthony, you want to wrap it up? Let's go ahead and say goodbye. But what's the last takeaway you want to let folks know?
The last takeaway is, if you have a pulse and you want to have generational wealth, and you do not want to make other people rich and put their kids through college and let them go to Santorini and other vacations at your expense, and your expense is from fear of the unknown, they can guide you with making the right decisions out of confidence and not out of fear.
And that's what my team is here for, you guys. We explain things. We want you to be in the know. We care about you knowing what's going on. So if you have questions, once again, 702-984-3700. You want to say goodbye, everybody. Thank you, Anthony, for coming on.
Thanks, Mo, as always.
Yes, and our team is here to assist. Anthony, you have a great one. Everybody out there in KUMV land, love y'all. And until we hear from you.